All right.
So, one of the biggest problems a lot of traders have is not knowing when to stop trading and or not having a goal of any kind to work with. This is the one thing that gets tr traders in trouble more than anything else. Uh, Not having goals that actually make any sense to them.
Sorry, I muted you by mistake. Go
Oh,
ahead.
okay. All right, so let me start again.
No,
One of
yeah.
the things that
Okay.
gets people in trouble. Go ahead, Dave.
No. I'm going to shut up now.
Okay. One of the things that gets a lot of traders in trouble is not having clear-cut goals, and the other one is not having sound money management. Um, and what I did was I created this spreadsheet with a friend, and we made some modifications to it over the course of time. And what this does is it keeps you in balance in your trading. It gives you a daily goal to shoot for, and it will show you the results if you just stick with your goal and try your best not to alter it. All right? And so I'll start off slow with this. Everything in magenta you can change, and I'll post this in the room when I'm done. All right, so we have monthly withdrawal. That means you made profit that month. You want to take X% out, put it in your pocket, and then keep trading. Max contracts, this was designed originally for like the S&P and the Dow, and you can trade up to 250,000 contracts. So for Forex, we just put 500 in there. And that's the maximum number of lots that you could trade, but we never get that high. Margin per contract is $500, so that's set up for 200 to 1 margin. There are many traders outside the U.S. can get 200 to 1, and I'm one of them, but that's for another conversation. Tick dollar, I average it out to $10 a tick. Now, obviously, some pairs pay $8, some pairs pay 11 or 12, but I, just use the average of $10 to keep the math simple. Commissions, if you're paying commissions for every trade with a broker, you would put that number in here so the math behind the scenes can calculate it and give you an accurate tally of what you're doing. Rounding up and rounding down and none. What this does is this will round up how many lots you're trading to the next highest lot, or it will round it down to the next lowest lot, depending on your particular money management style. All right, so for now I'm going to put none. I'll put none in there, so we're not going to round up. We're just going to stick with the straight math. Okay, here it says daily starting balance, and then it says percent of account traded, and here is your daily profit. Okay, and this is the ticks you're shooting for that day. So in this particular scenario, I'm going to put 0 for the commissions, by the way, just to keep the math simple. All right, so in this case, we have an account with $1,250. You can change that. And this number shouldn't be 28%. I was experimenting with someone going over some scenarios. All right, but let's make this 5%. Okay. All right, so now we're going to make this 5%, and we're looking for 5 pips a day, only 5, and then we're done for the day. Now, with this 5 pips per day as your take profit, this is based on a 1-to-1 risk-reward ratio. So we're also going to have a 5-pip stop. Okay? So if we lose 5, we make some money. If we lose 5 pips or make 5 pips, it keeps everything in balance. And you can see here, if we never miss a single trade in the 120 trading days, and I'll just roll down. There are more boxes here that I'll explain later. If we take our 5-pip target and hit that target every day, at the end of 12 months, your 1,250 will turn into 4,500. Now, that may not initially sound like a lot of money, but this is extremely powerful. Believe me, this is powerful like nothing you would really believe. Now, I want to talk about this 5% here. Many of the trading books tell you never risk more than 2 to 5% of your account, or 1 to 3% of your account. And I won't have the time today, but if you do the math, let's assume that we win this trade and it's $6.25. In fact, let me make this a -5. Okay. And so if I lose this trade, I lose $6.25. If you do the math, you'll see that $6.25 is a very small percentage of 1,250. It actually comes out to far less than 5%. But do that math on your own, and you'll see what I mean. Work your percentages, and you'll see exactly what I'm saying. All right. So in this scenario, we're starting with $1,250, and we're going to risk 5%. We're going to use 5% of that. Okay. Now this column is extremely important, because in this column we are always going to trade 5% of whatever is in the daily starting balance. So what I want you to see is that here we're risking 5%, and it calculates out to 0.13 lots. Okay? And at 200 to 1 margin, that means in order to take this trade, we're going to use $62 of margin. So you'll see that I'm going to scroll down a little bit, that we continue to trade 0.13, and we make our 5 pips every day. And you see here the account keeps growing. Okay? But we're still only trading 0.13. Now, we don't bump up the trade until we've made enough money that the account can absorb it. So finally, when we get to $1,300, we're still only going to trade 5% of that. But now, because the account is larger, our lot size is larger now. Our lot size now is 0.14. All right, you see that?
Yeah.
And this is what keeps your money management in bounds. This is extremely important. You're always going to risk 5% of whatever this number is. Now I'll roll down a little bit, and when the account gets larger, we now jump up to, now we're up to 1,450, 1,451 for those that want to be exact. But now we can trade 0.15. But if you do the math, you'll see that this $7.26, if this was a losing trade or a trade that went the wrong way, you'll see that that $7.26 is less than 5% of 1,451. So you're never risking a huge amount of your account, even on trades that don't pan out. And as I scroll down farther, you'll see now we can graduate up to 0.16. Okay, now this is after 45 days of trading. I should have mentioned this first column here where it says trade number. These are individual days, okay? So what, again, remember, this is make 5 pips a day and walk away. Now, some of you will go for 3 or 4 trades of 5 pips, which is your prerogative. But if you wanted to do 1 trade a day and have a very simple and clean method for making some money, this would be it, because you're not looking to make a huge amount of pips, and you're not risking a huge amount of your account either. So, and as you can see, if we follow this down now, all the way down to the last trading day, all right, and that's the 13th month. At the last trading day, we're still only trading a half a lot, not even a half a lot. But we've grown our account from 1,200 to 4,500. Okay? And every month at this level, if we just do this 1 trade and never change anything, never move up any higher, if we do this 1 trade here, you will make $434 a month on an ongoing basis. All right? So let me just stop. Any questions on this part so far?
Yeah, Lou, let's go back to the beginning for a second. And can you hear me?
Yeah.
All right. I just, so if I'm trading 1 lot, that's the That's the one lot is the,
Well, now see, then I have to stop you.
okay,
You
right.
you
Percentage
do
wise.
it
Okay, sorry.
right. You're doing it wrong right off the bat. It's
Right,
not about it, it's about protecting your account
right. I see
because
that now. Okay.
right. So
Um,
let's make this a 10,000
well,
$200.
not too many people are going to be trading a $10,000 account, but you know, so we'll stay with the small numbers that I appreciate that you
Okay,
have there.
give me a
So you
number
know,
that would be
well, like let's start with a $500 account because a lot of
okay.
people that's what a lot of people are, and what I'm telling people their goal should be is you know, if they do 20 pips a day. So if you know,
All right. So I'm going to change this to a 20 then. So I started with a $500 account.
yeah.
I'm still trading at 200 to 1, which is margin per contract. That's still 200 to 1. You got that?
Now, how do you where did you calculate the 200? Is that somewhere else? To, if
Every broker site, it's listed. But
I know, but how do you establish? Let's say your broker is only 50 to 1. Where is there a spot where you can put that?
yeah, that goes right here in margin per
Okay.
contract.
Okay.
So yeah, at 100 to 1, this would be $1,000. At 50 to 1, this would be $2,000.
Okay. That makes sense now. Sorry.
You got me?
Yep.
So most people are trading at 200. Well, most people I know are trading at 200 to 1, but you
Sure.
can certainly change this to fit your circumstances. So we're only going to risk 5% of this number here.
Right.
Got me?
Yeah.
So now in our ticks profit, we're looking for 20 ticks a day, which is really, really doable. When I teach this in the beginning, I try to show people to keep it modest because greed, I won't even get into that. Maybe one day I'll talk about trading psychology, but for now,
Yeah. We talked a little
greed
bit about
kills.
greed yesterday. Just
Yeah. So if we have a $500 account and we're trading 5% of that, okay, at 200 to 1, okay, we're only using $25 of margin, all right? And
yeah.
if we're going for 20 pips a day, at the end of 13 months, that $500 could turn to $86,000.
Right.
Now, disclaimer, I've never been this high. I usually have like a life target, as I like to call it, and I've used this to take both my daughters on cruises for their 16th birthdays because I had a year. You know what I mean? So I knew their birthday was coming, so just a day or two after their 15th birthday, I put $1,200 is what I actually did in an account, and I had my numbers worked out, and I knew how much I needed by the end of the calendar year. I actually needed it 3 months before because you have to book the cruise early. But anyway, and on 2 separate occasions I did this, but this was in a separate account that I didn't play with, I didn't diddle with. You know, I got my 8 pips a day, whatever the number was, and just left it. You got what I mean?
Yep.
It wasn't part of my normal, you know, trading for paying the bills, which is the other thing, because I pay all my bills out of my trading. So it's real important for me that I'm diligent, because this is what I do full time, even though I'm not at the computer full time. If you get what I mean, this is my full time income.
Yep.
All right. So at 20 pips a day, if you don't miss a single trade, I mean, if all your trades are winners, and with a 20 pips a day, you have, again, we keep this at risk reward at 1 to 1. So if you're going for 20 pips, your stop loss is 20 pips. Got me? You can always modify that yourself, but if you're going for 20, your stop loss is 20.
Right.
Now, as you can see, we start out at 0.5, not even a 1 lot. We're trading, 5/10 of a lot. So you don't even have to start with a huge amount of money. This is the other thing people get really confused with their trading. They think they have to really over-leverage and over-trade their account in order to make money, and it's nonsense. You will either pay for your trading with risk, meaning trading a lot size that's far too large, or you can be smart and pay for it with time. Use a smaller lot size, but give yourself time to build the account. All right, so here we're starting with 0.05, 0.05, and then once the account grows large enough, right here, and we're at 552, we now graduate to 0.06. So let's scroll down. Just a survey. How many lots do you think we would need to be trading at the end of the year? How large do you think this number will get?
I don't think it'll get. I don't think it'll get better than a 0.25, personally.
0.25? Okay, we'll see. And remember, you're going to end up with 86,000. So we don't miss, every day we make our 20 pips. We never have a day when we don't make our 20 pips. And I have something to calculate that also, to calculate losses, but I'll show you that in a minute. So let's roll down here. Let's roll down to about 6.
I lied. Look at that, 1.3.
Just curious, well, a lot of people don't really understand. Okay, so let's go down. Let's go to the 6-month mark. So here is month 6. Okay, and notice you're only trading a half a lot, 0.53 at month 6. You're not trading. You're not even trading a whole lot, and you're making $1,700 a month. If you were to take this one position right here, this bottom row, and leave your account at that size, trade your 0.53, and make your 20 pips a day, if you never went any farther, you'd make $1,700 a month. Now, I have something similar that I do for this for paying my mortgage. You follow me? I grew an account to a certain level. As long as I get my number, I'll have enough money to pay my mortgage, which with Dave and a couple of guys that know me, which is why I have several accounts.
Yeah, I'm in the same boat.
Yeah.
I
All right.
have 4 accounts that I trade.
So let's assume you've got your car. You're paying $400 a month for your car. Let's assume your electric bill is $500 a month, and let's assume a life insurance policy is $500 a month. This one account will pay for all of those. Okay, and you're only risking a half a lot. Where people get into trouble is they have a $5,000 account, they start trading 2, 3, 4 lots, massively over leveraging the account because they don't want to pay for it in time. This is crucial, and I'm tired of banging my head against the wall telling it to people, so I'm glad you're recording this. This way I only have to say it once. And after people bang their head against the wall long enough, they're going to come back and say, you know, Uncle Lou might have been right. Okay, I've been through this, okay? So now let's go down to the 1-year anniversary, month 12.
Holy. Cool.
Okay. Now at month 12, you're making $18,000 a month. You're trading 5.6 lots.
I was way off, eh?
Yes. Okay, you're trading 5.6 lots, but keep this in mind. That is still only 5%. It's still only 5% of this number in this column. You have never increased your risk 0.1%.
Right.
And
But now, what if you're taking money away? Like, I mean, every month.
I'll get to that in a minute.
All right.
If you do the math, if this last trade here was a losing trade and you lost to 1,136, do the math and figure out how much, what percentage 1,136 is of 56,000.
Right.
You'll see it's less than 5%. So you're never risking more than anywhere near 5% of your actual trading capital. That's important. Do the math, and you'll see that on your own. What time is it? Okay, I got a few more minutes. Now, if you wanted to stop right here and do this one trade day in, day out, you'd be making $18,000 a month permanently. Doing this one trade, taking this one 20 pip trade every day. Okay, so you don't have to run this spreadsheet. You know, you can reach your comfort level. You follow me?
Yeah.
Now, the other thing I designed in this, because what was important for me was to have some pocket money. So there's another column here at the top, and this is monthly withdrawal, upper left-hand corner. I'm going to put in 50%. So I'm going to take 50% of my profits, put it in my pocket, leave the other 50% in the account, and then keep going. Now you see at the end of the year, you're only going to have in your trading account $8,000. because every month you're taking 50% of the profit, and that 50% grows exponentially. That's why that number seems skewed. So now let's go down to month number 1. I made $242. I took half of that out of the account and put it in my pocket. So I've got $121 in my pocket to go do what I want to do with, and the other $121 goes back in the account. So what I want you to notice here, at day 20, your account is $728. But look at day 21, you're starting with less than that. That's because you took this 121 out. Do you see that?
Yep. Yep.
Okay. There's something
Now, all that stuff over there in the red.
I'll explain that in a minute.
All right.
I'll explain that in a minute. So I just want to go down here. Let's just go down, because one of these. Okay. So now at the end of month 13, you're making $3,000 a month on a consistent basis, and you're actually making more than that, but you're taking out half of that. You're taking out $1,600 to put in your pocket every month, and your account has grown to $9,000. You got that? But now this $8,000, they're calculating this withdrawal in there.
Yeah.
You see that?
Yeah.
So now you can put whatever percentage you want in here that will fit your lifestyle. And as I said, you can reach a comfort level. This might be a comfort level for some people. They'll say, you know what, I'm up $7,500, and I can make $150 a day every day, and that'll net me $2,600 for the month. That would be a nice, good for some people, but you have to know your goals. And it's another thing I'm tired of banging my head against the wall trying to tell people. You have to understand what your goal setup is.
Yep.
I don't know who this is.
Yep.
I'm not going to answer it. All right? So now I've managed money for people before. Okay? I don't have the time to do it now. Everybody that I managed for, they've been very happy. Let me make this a 0. And what I did was I took the same concept and I wanted to work it over a monthly basis. So in red here, okay, let's say I wanted a daily profit of 3% on my account. And I'm going to use Dave's number of 500. So I'm going to put $500 in here. I'm starting with a $500 account. And I'm going to go for 20 pips. So in essence, if I get 20 pips at the end of the day, I will have made 3% for the day. Now, I go down here, it will tell me what lot size I need to trade. So in this case, I need to trade 0.08 down here. These are not, the width is not right, and I don't know how to fix it. I'm not a spreadsheet guy. Maybe one of your guys would know how to even it out, make it look nice and neat. But you got me?
Yeah.
Okay. So if I take 0.08 with a $500 account, and if I make my 20 pips, that will give me 3% profit for the day in that account. And that 3% profit equals $15. Okay?
Yeah.
If I wanted to make, now this account is so small it won't break it down into mega decimals for me, but let me make this a $1,000 account. And if I wanted to make 3% on a $1,000 account doing 20 pips a day, then what I need to do is trade 0.01 lot every day, make my 20 pips, and then at the end of the month, I'll have 3% for the month. Do you follow me on that?
Yep.
So if you do 3% a month, after 10 months, you've done 30%. They will beat your door down to get that kind of return consistently.
Yep.
And look at your risk is only 0.01. Oh, I have to change this. Starting balance, margin required. Yeah, let me change this. This should be
500.
Based on leverage. Yeah. Oh, my computer's just so slow. Oh, yeah, yeah. Okay, I had to just change that around. But you get the idea. If I want to know, if I wanted to make this daily profit number, but in a month, I would trade the monthly lot number and still go for the 20 pips.
Yeah.
All right, so let's get rid of that. Now, this may come as a real big shock to some of you guys, but we don't live in a perfect world. I know, it's heartbreaking to hear, but we don't live in a perfect world. There are going to be days when you're going to have some trades that don't pan out. So I calculated a random loss generator. So in this case, I'm going to say, what, 25% of our trades are losers? You like that number, Dave? You want to change it?
No, yeah, go ahead.
25% of our trades are losers, and our losses are between 10 and 20 pips, since we're going for 20. Because some trades you may put a 5-pip stop. Some trades you may put a 10-pip stop. You got me?
Yep.
25% of our trades are going to be losers, and the losses are going to be between 10 and 20 pips each. So I click off here on the side, and I come back, and you'll see that the calculator has randomly popped in some losing trades. You see that? Minus 19, minus 19, minus 14, minus 15, and we'll catch an area here. So they usually put like 3 or 4 in a row, because that can happen too. But they're random. Okay, yeah, see here we have an 18 and a 16 back-to-back. So with 25% of our trades being losers, okay, or trades that don't pan out, and the stop outs on those trades are between 10 and 20 pips. Let me go back and so you see it. We're still able to take a $500 account and grow it to $7,000. Now, again, some people think, oh, God, I got to work for a whole year just to get that. If that's your attitude, trading is not your game. And I'm going to tell you right now, if you're not willing to be patient and work and build an account, this is not your game, because as fast as you get an account to grow with over leveraging and taking, gunslinger kind of trades, that money will disappear from your account just as fast, because you didn't have a disciplined method to grow it. You follow what I'm saying?
Yep.
So this will really keep you in line if you follow it. Many people, the patience is what kills them. They don't want to wait.
Right.
Because you got to understand, you're only going to make $10 for that day if you make your 20 pips. And that's just like, oh my God, you're kidding me. I got to go all day for that. This is not your game. If that kind of thing goes in your mind, run as fast as you can to the nearest job. I'm telling you. Okay? Because this is going to be your livelihood. This is going to be your job. And if this is your requirement, and you've far more than doubled the account. I mean, not even an issue. Okay, and I'm telling you this works because I've paid for some moderately expensive things doing this.
Yeah, you just took your wife on a cruise, didn't you?
Sure did. Well, but that was on a gold trade. A guy called me up and was trying to tell me, hey, you should buy gold, Lou. This is in September. And Lou, you should buy gold, the economy this and the world conditions and terrorism and blah, blah, blah. Gold is safe, blah, blah, blah. So I looked up a gold chart. I looked up a chart on gold. It was a weekly chart. And this was in September. And if you go back to September, you'll see gold was in a massive wedge. And I told the guy there's no way I would buy gold right now because gold is going to tank. And if you remember from my lessons, I showed you how to project where price will go when you break out of a wedge. And I laid out that projection. I said, I think gold is going to go down to 1150. He's, my experts and blah, 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 and our research. Okay, I'm just the big dummy. And we made a gentleman's bet that when it hit the 1150, he would give me a call. He owes me a dinner. Make a long story short.
There you go. There you go.
So what happened was it broke the wedge, went exactly where I thought it was going to go. It actually went even a little bit lower. But I couldn't trade gold because the leveraging in my account didn't allow me to trade gold. Make a long story short, I sent somebody some money in an envelope, and I said, if gold drops here, put it in. If the gold drops there, put it in. And that's what they did, and that's actually how I got that money to pay for the cruise. So it was a gold trade, but that's a side issue.
Yeah, I'll send you that shoebox later. No, it
Okay.
wasn't me. No, no. Anyways, does anybody in here have any questions? I know it's a small group of people, but Kurt, you got any questions? Roger?
Okay, that's good. That means I can get out of here. I have to get my wife dressed and prep for the doctor and all that. So I'll drop this in the pit.
Yeah, yeah. You can drop it in the pit, or you can send it to me, and I'll drop it in there. It doesn't matter, one way or the other. No, but it's very interesting. Thank you. Okay. Either or, if you know, I'll keep a
All
copy
right,
of
I'll
it here.
drop it in you, and maybe you just send it to the guys that showed up.
All right.
You know what I mean?
Yeah. Yeah. No, if somebody's interested, I'm going to drop the recording in the pit anyway. So.
Okay, good.
All right.
And if they're interested, but as I said, that mental thing is what kills traders, and they just simply refuse to get their head wrapped around money management, discipline, and protecting your account.
Yep. No, I agree 110%. I really do appreciate you taking the time out of your busy day to share this information with us. I know that you've shared this with me a couple of years ago, and yeah, no,
It still works.
it still works. Yep.
Yeah.
Okay.
I'm telling you.
Awesome.
All right. So, yep. I will talk with you guys later. I'm going to drop this in your Skype, David. I'll drop it in the DF.
Yeah, that's good. All right, we'll talk to you later.
In fact, it'd be better to do it that way, because if I drop it in the main Skype, that will slow my Skype down.
Yeah, yeah, no worries.
Multiple downloads. All right.
All right.
So I'll check in with you guys later.
All right, have a good day. All right,
Okay.
bye.
Bye bye.